Hey there, you are listening to Paradigm Shift, a podcast about turning points in careers, companies, and lives. I am Ashish, and I'm joined by my co-host Zane. And today we're really excited to talk to Prasanna, who is the co-founder and ex-CTO of Rippling, about his entrepreneurial journey, about his experience founding Rippling, and what he's up to these days. Prasanna, thank you so much for joining.
Thanks for having me, guys.
So maybe we'll start off with a bit about your background. Do you mind telling us how you got into software?
Yeah, definitely. I mean, I was not a great student in school. I wasn't very good at learning these things. I didn't find it very interesting. I was sort of a mediocre student at school. And then my parents bought a computer at home. And for a kid, it's just like great to play video games all day. It seems like a lot of fun. And then when I sort of discovered that you can actually code these things, it felt like very interesting. I started getting very fascinated. To my son, who's growing up now, he asks me, Dad, like, what do you do? What do you like? And I tell him I'm a trader and a coder. Those two things I really sort of enjoy. And the reason for that, early on, the thing that I discovered is you can build everything from first principles in these two things, right? That experts don't matter. You can throw away the textbook. If you're building something in a computer, there are only like 8 instructions that fundamentally matter, right? Like, add, subtract, multiply, then go to, and, if, and like, that's it. You can build everything with it. And, if you're building like whatever, a printer driver or something, you can just ask yourself, how would I build it? And often in real world, the way it's built is similar to how you would build it, right? So it was just a drawing canvas on which, you could just have really long inference chains. You can sort of just play chess 10 moves deep, and the most likely move is, you can actually predict the line, for a really long time. Unlike in math, maybe you can sort of maybe do like 5 moves deep or something without knowing the rules. Maybe in physics, you can hardly go 2 moves deep, right? It felt like a fascinating way to live inside your head. I really enjoyed that as a kid.
And what kind of things did you enjoy coding when you were young?
The first amazing thing that I remember was I built a very simple, I would be embarrassed to even call it a virus, but something like that. My friend asked me for a game that I had. The game was called Magic Claw. I don't know if you guys remember, when I was a kid, that game was pretty famous. But I had a CD and my friend asked for the game. So I sort of copied that CD over into a different CD. And on CDs, in Windows, you have something called autoexec.bat, which is basically, as soon as you put the CD in, that script will run. So
what could possibly go wrong?
So my friend puts a CD in, and his Windows boot up screen is suddenly now showing a picture of Rajinikanth, which is a hero in Tamil movies. And there is a painful 5-minute countdown that he needs to go through before it'll let him pass. And if he wants the antivirus, he needs to email the address, killercoder@gmail.com or something, for the antivirus. Right. The next day, my friend came to school and he's like, dude, what the fuck, man? Why did you give me that CD? My dad beat me yesterday. Like there was this virus infected his computer and, he beat me up. And, I even got a mail from his dad asking for the antivirus. So, that was the first memorable thing that I ever coded.
And you were being pretty nice in that situation. There were much more nefarious things you could have done.
It was a lot of fun. It was a huge joke the next day.
So you got into computers and that was kind of like where you enjoyed building things. So how do you go from writing viruses to becoming like the top coder in the country?
Yeah. So that was definitely game changing for me. Most other subjects, I spend most of my time building some games on a computer and stuff like that, having fun. And my teacher put me into this contest called IOI, International Olympiad in Informatics. And they said like, hey, please go represent our school. So there was a zonal test on that. And I was like, hey, I'm a great coder, right? Like, of course I should clear the test. So I went in, I didn't know what the heck it was. Many people prepared for it. So I just went into it. And the problems were, there was no computer. They didn't give me a computer. They gave me a piece of paper. And they asked me stuff like, hey, listen, there are 5 points on a map. Like, how do you sort of visit all these points once and exactly once in the shortest distance, right? So I didn't know, I didn't know much algorithms or anything like that back at the time, I was in school. And, these were the problems in that thing. And so I had to sort of just come up at that point with the solutions for it. And, I sort of came up with the patterns, saw all these examples, and I sort of walked out. And I remember, I was the first guy who left that hall, right? Everyone else was solving it, including, folks who were toppers in my school who prepared for that stuff for a long time. Everyone was sort of really calculating n equal to like 10 or 20, if you do exponential versus an algorithmically different solution, it sort of takes much different times, right? So I was able to sort of really finish it. The others were sort of really brute forcing their way. And like my friend sort of came out and said, hey, like, why did you give up? And, I said, I didn't give up. I actually, I actually did it. So, that was my first introduction into this algorithms and stuff like that. I just like discovered that, I was reasonably good at sort of figuring out these patterns. That's when I got a bite of these algorithmic contests. And then when I was in college, Google had launched this huge event called Code Jam. And one of my seniors was doing it in the computer science lab. He was like, hey, I heard, you're a good coder. Can you sort of help me with this? So I sort of came in and saw, okay, these seem like interesting problems. I knew a little bit of algorithms at the time, not much, based on that informatics experience. And, I sort of tried my hand at it. This was my first ever contest. I actually qualified to the finals, the India finals. And I was like pretty surprised by that. I didn't know much. So then I actually, I cleared the round and, Google India sort of invited me to the office to sort of go to the India finals. I didn't know much computers and algorithms and stuff like that. So I started learning. I practiced for like 3 months or something. And I went to the finals. I don't know if I did solved zero problems successfully, or I solved one problem successfully, but I did pretty poorly. That much I remember. I didn't do well at all, the India finals. But then I sort of came out, I learned from others how to solve these things. And it felt like I could have actually solved it. I could actually learn and solve these things. So I put a lot of time into it because, of course, nothing else in college is interesting. Nothing else in academic life is interesting. And this seems like a cool new thing. And it's Google, right? Google is everyone's dream job at that point, like people who are studying computer science. So Google is sort of running it. It feels like, you could get a job at Google if you did it. So it seemed like a very interesting contrarian bet, versus going the straightforward studying academics or something. It seemed like a sort of fairly risk reward in retrospect. And I sort of went all in on it. Over the next 6 months, that's the only thing I did. I didn't go to much classes. I just practiced computer science and algorithms and sort of went deep into it again. Lived in my head for a long time. Just like when I went to sleep, just was thinking about algorithms and the tough problems that I couldn't solve. And I just kept incrementally getting better, right? And 6 months later, there is Google International Code Jam that sort of came. So the Indian one was the one that happened. And then, 6 months later, there was the international one, Google International Code Jam World Finals. So then by the time I was like, maybe I can give it a shot. And then I was ranked 1 in India by that point. So, it was just a fascinating journey. And it gave me a lot of confidence, right? Like that's the sort of core ingredient that I actually took away is like, one, I can bet on something very contrarian, not take the traditional path, just like go this contrarian route. And 2, to sort of actually see it work on a massive scale. At that point, it was just like a rocket ship moment for me.
That was the key inflection point and a paradigm shift for you. So you get into programming, you start to get really good. And then at some point, you come to the US to work at Microsoft. It's pretty clear to me that you were destined for startups at this point, but you ended up at Microsoft for a bit. And then how did you then transition into startups? And we'd love to hear about your early sort of startup adventures.
Yeah, definitely. For me, much of my college days, Google was my dream job, right? Like, I placed this contrarian bet on Code Jam and Top Coder and stuff like that. And the payoff is actually a job at Google, right? Like that's the payoff. I strived for it, struggled for it, put a lot of time into it. And I actually got the payoff, like second year, third year into college, I had offered to work there. Pretty mind blowing. Till then, like nobody from my college has ever gotten a job at Google, right? So they were like, holy fuck, this guy actually has a job from Google. And there's like Google Mountain View, right? Like no one has ever sort of gotten hired over there, not even in the India office. So it was a huge deal. When I was in the second and the third year of my colleges, I actually came to the main headquarters and people are just playing volleyball to the World Finals. I came here and people are playing volleyball and I'm like, where is the office again? People are playing volleyball, chilling near the swimming pools. And, my guide was telling me like, all these guys are multimillionaires, like, holy fuck, you play volleyball and you become a multimillionaire. Like, how does that work? How can I become that? Right. So it was a huge dream job for me at college. And then, by the time I sort of graduated, I kind of grew over it a little bit. I had an offer from Google and Microsoft, and, it seemed like they were sort of competing. And, Microsoft just paid me more. So I just said, I took it. And, it seemed like a dream job at the time, right? So the Microsoft Bing is basically, I wrote code that's pretty low level, C++, it ran on hundreds of thousands of machines. And, you need to be very, very precise algorithmically. There were small changes that I made, which sort of saved like, millions or tens of millions of dollars, right? And for a guy who's coming out of college, it seems like, holy fuck, I can do great job here. First 3 months, 4 months, I worked like crazy, like I've not seen anyone who worked that hard. So like, I worked like crazy for the first 3 or 4 months, it seemed like an insane opportunity. I remember one incident where The guy who hired me, he was the founder of Bing. He started Bing. His name is Gaurav Sareen. And he sort of sent an email saying, hey, we have this huge issue. We have this huge use case that we cannot support. We need to sort of staff a team and build this use case, right? And, I was this kid from college, really hungry to prove myself. And I was sort of new to the code base, right? That's sort of first month they were sort of telling, hey, go learn all the code base and stuff. So I was really hungry to prove myself. So that email, I got it at like 6 p.m. in the night, right? I sort of decided, I'm going to give it a shot. I'm going to sort of make it a top coder problem, like really quickly crack it, right? So I stayed up all night from 6 till like 10 a.m. next day. And I wrote a code and I sent a patch. Next day, I sort of sent an email with a patch in it, which is a large diff, not that large, maybe like, 500 line diff, which touches like, maybe 5 different executable components along the Bing search pipeline to accomplish that feature, right? And I was just like, I didn't know what the fuck that was. That's the first time I'm encountering that code. I'm just like testing it in localhost and somehow making it to work. And I sort of made it to work and sent a patch, right? So those things were really amazing for me. It was a way to prove myself. And, I was like, I feel like a great guy because I feel like, I'm one of the few people who could pull this off, so those were like very good moments for me to express myself, express my art. So it was great in the beginning, right? And then, what you sort of realize is, yeah, you can produce code like really fast, but it just doesn't go anywhere. It just takes like forever for anything to happen. So it started getting frustrating pretty fast. It's sort of like you've done sort of the meat of it. Now you need to do the last 5%. And, there are people around you who sort of like drag that 5% to eternity. And then, there are a lot of objectives which are sort of make no difference, right? So, it started getting frustrating pretty fast. And, you look around and see, hey, all these people, worked at Microsoft, got married inside Microsoft. The average tenure is like 10 years or something. And then you ask yourself, fuck, is my peak behind me? Is top coder my peak? Like, am I stuck here? Like, what the fuck, right?
Yeah.
Then you kind of have this existential question, what am I doing with my life?
How long did you spend at Microsoft?
I spent 15 months, a year.
Okay, yeah. I spent 3 years. And I think Bing was one of the faster moving orgs within Microsoft.
That's true, actually. That's true. It actually had hyper growth. When I joined, there was 50 people. And then when I left, there were 2,000 people. So there was quite a bit of hyper growth there. It was relatively fast moving. I say I spent 15 months, right? But like the last 4 months, I didn't even go to office. I didn't even like respond to emails, right? 4 months. And it took them 4 months to figure that out and fire me. If that's not insane, I don't know what is. It actually took them 4 months to figure out there is this guy who never comes to office, who sort of like doesn't attend any of these meetings.
I used to get like really good reviews at Microsoft. And it's weird. There'd be months where I'd show up at the office at like 11 a.m. and like everybody's gone by like 5. It's strange, the big company culture. So Microsoft happens, the classic big company experience. And then you're kind of, okay, I want to sort of like work on something faster moving, something more challenging. I want my peak to be ahead of me. So you jump into startups. And then at some point you do LikeALittle, which was this social network that had like this crazy growth for a bit. Was that your first startup project, or did you sort of like work your way up to that over a couple of iterations? What happened there?
I mean, I left Microsoft because obviously, my life would be over, if I stayed there. I just couldn't do it, anymore. But at the same time, Paul Graham was happening. Nerds were getting rich. And, for the first time, you don't need to sort of wear a suit and convince a VC and raise $5 million to start a company. You just sort of, you didn't need any connections. You can just apply on this website online and, you can actually get rich. And the hit rates were very, very high. PG's one of the first blog posts where like 50% of the founders that he funded, in the first 2 batches were millionaires, by the time I was applying. This was even early 2009. So it felt like, there was a huge movement that was happening in the center of Silicon Valley, something that Valley has never seen and the world has never seen. And nerds were getting rich. Nerds could start companies with like very little capital, and I wanted to be a part of it. I felt like that's the biggest thing that's happening in the world at that point in time, and I wanted to sort of ride that trend. And I just wanted to make $1 million. I wanted to know the fastest way to make $1 million, and so that I never have to work at a shitty job at Microsoft ever again. That's all I wanted. And PG was saying, hey, listen, look, shoot for $1 million, not $1 billion. And the hit rate on that was like pretty high. So I really wanted to participate. I sort of took a flight and sort of came into the Valley on a tourist visa. The first week we met with PG and I pitched him my idea, which was a horrible, horrible idea. And PG was like, hey, listen, I read your idea. It seems pretty horrible. We wanted to meet with you guys because you guys seem really smart. obviously you guys have done amazing thing with your life. Do you guys have any other idea, that you guys are considering? And, me and my co-founder, sold PG that, hey, this is the next Dropbox, you need to bet on this. And PG was like, well, okay. That didn't go very well at all. So right out of Microsoft, I didn't know what the fuck I was doing, right? Like I had no idea. So, I took a stab at it. I sort of tried several different ideas. LikeALittle was actually probably like, the 10th idea or something. That was like 18 months later. We had burnt out, trying like 10 different ideas, trying to sell. Nothing was really working. And LikeALittle was actually a copied idea. At that point, we sort of gave up saying, fuck, we can't generate ideas. We just don't have it in us. And there was this social network that was taking off in my girlfriend's campus in Cambridge. And we said, we're just going to just copy it. My girlfriend sort of called me. She's now my wife. She called me and said one day, like, hey, you guys don't come up with good ideas. There is this thing that's taking off. Do you just want to copy it? And that's exactly what we did, actually. That's the one thing that worked finally.
Prasanna, do you mind describing what LikeALittle was? I remember using it actually in the early days. I went to Columbia and there was a thing called Board at Butler, which was similar, never expanded, but for the audience, it would be helpful for them to know how it worked.
Yeah. So LikeALittle was an anonymous campus social network. It was a flirting site, right? So 2/3 of our users were women, 1/3 were men. Predominant use cases like something like a girl sort of seeing a guy on a library and she's sort of making a post in LikeALittle saying she's selecting, the library as the location, and she's making a post saying, hey, the guy in like, green jeans, I think your hairstyle is hot, or something like that. They're expressing a tiny crush on a different person. And, what actually happens when you do that is like, everyone in the library is sort of guessing who is talking about whom. And there is this whole, insane gossip that goes around, like who's talking about whom and like what is this thing that is developing? What is this sort of like, tiny relationship that's developing, live? So that was very, very viral. We launched it in Stanford in the first week, almost 20% of all Stanford students were using it. And, it was insanely viral, right? And then we sort of learned some formulas for how to launch it in different campuses. We really productionized that. And within the next 6 months, 20% of all US college students were using the site. We actually even went to the native sort of Cambridge, where the competitor FitFinder was launched. And we actually overtook them in their own campus, right? Because by the time we had gone through enough variations in the US, learned a lot of strategies that work, that don't work, and we sort of outperformed them in their native home territory. So it was kind of insane for a short period of time. And, Facebook made an offer to buy it. Google made an offer to buy it. And then it crashed post that.
So walk us through that. What happened? So you decided not to sell. How do you look back on that? And it seems like it was a very quick crash after that.
Like Brett Taylor, who was Facebook CTO at the time, he sort of came and, tried to buy it. Paul Bouchette, who was Brett Taylor's co-founder in his previous company, he was a major investor in the company. So, there was interest there. Mark Andreessen was the biggest investor in our company, and he was also on the board of Facebook. So Zuck was like talking through him as well. Marissa Mayer was interested, at some point. And we had like those offers, they're just like oral offers, right? We didn't sort of go through sort of due diligence or whatever. They were in sort of the $50 to $100 million range, which was like huge money for us at the time. We spoke to Mark Andreessen and he was like, hey, listen, why would you sell something that's growing this fast? Like it's kind of crazy. And it's also like on a dollar per user basis, Facebook was getting valued at $100 per user. They were willing to pay us like $5 per user. So it felt like, it was kind of still cheap on a dollar per user sort of basis on a relative valuation. And, here is the kicker. Facebook was like, they would have paid like 20% cash, maybe 80% stock. And we were thinking, fuck, 80% in this Facebook stock thing, I don't know, like it's valued at $6 billion. And, is it going to be worth more than $6 billion down the line? Who the fuck knows, right? We were also concerned about that,
And that was the conventional thinking back. I used to think that too. And it's kind of crazy how wrong we were.
Yeah. Everyone has massively underestimated the size of these markets.
Right. So, had I sold it, that would have been worth $1 billion or something,
Prasanna, was this before mobile or was this on the iPhone as well?
This was before mobile.
Because that also plays into this whole Facebook thing. So you're like, who knew that the iPhone would become like this new shift and that they would monetize even better?
You turn this down, it crashes. And then of course, like the next couple of years, you see Facebook continuing to grow in valuation. How did you think about that?
Actually, the next couple of years, Facebook didn't continue to grow in value. It was pretty bad news for Facebook. For the next couple of years, they couldn't raise money and all that. We were more like, well, it was a mirage anyway or whatever, right? I never kicked myself for not selling. I don't think of it as like would have, could have, stuff like that. I don't go back and think that way. I think I still would have, there were some data points in front of me, and I made the best decisions with the data that I had at that point in time. With that same data, I would absolutely make the same decision again. And even when it didn't work, I would still sort of make the same decision again, right? So, I never sort of thought, hey, listen, I should have made a different decision. But like, based on what? I didn't know that it was going to crash. I don't sort of get kicks playing in a casino. Like whether or not I win or lose, it just doesn't even bother me. So, the LikeALittle thing didn't quite bother me. What actually bothered me was sort of the burnout after that. After that, we were back to the drawing board, trying out ideas. And there is another 2 or 3 startups, there were 10 before, and then there are 2 or 3 that didn't actually still work. And I was like, fuck, it was painfully clear that, I cannot do a successful startup. And that bothered me a lot. It was very personal. It's kind of me. It's not the markets. I just could not come up with something that would work. And that was pretty painful. I by that point, I sort of like quit everything. I don't want to take up another job again. I was pretty burnt out. I worked pretty hard for a long time enough. And then the biggest part of the burnout for a failed founder is actually the pretending to your friends. I was having these sort of meetings and dinners with, fellow YC founders, who were, we were voted the hottest startup in our batch, right? At that time. I don't mean Rippling, like Rippling was also the hardest startup in our batch, but LikeALittle was voted the hardest startup in our batch, which is what like Dropbox was voted or Stripe was voted as, right? And then, all these people are sort of, MemSQL founders are meeting with me and they're sort of asking, hey, how are you guys doing? And, they had just raised like $20 million round or whatever, right? And I'm sort of having to put up this fake face that, hey, it's going well, and, I need to put up this face or all my employees will quit tomorrow. So there's a lot of charade that you go through as a founder, especially when things are failing. You can't really be honest. And that is what burns you out mostly.
I can imagine that being super painful. So LikeALittle happens. You have a couple of other ideas. I assume you had maybe the same team or you passed it and continue to work on stuff. And then at some point you end up at Zenefits, and then you go on you finally after 10 years in the Valley, achieve like really good success with Rippling. I got to see a little bit of that because we were in the same YC batch. So we'd love to hear sort of in your own words how that came to be and what some of that experience was like.
So post LikeALittle, after these failures and burnout, I was really sort of burnt out. I said, fuck it, I can start a company. I left the Valley, got married, spent some time in Netherlands, was chilling for a while. And I was sort of doing some stocks and trading and stuff. Again, I kind of enjoyed that a little bit. But then I was starting to crave the action. The best time in my life was still, the hyper growth in LikeALittle, where, the traffic was doubling every 2 days and stuff like that. So I really wanted to get back to hyper growth. And I didn't want to do consumer internet again, because users can suddenly leave your site and you never know if you're building something again, like valuable or not, till the very end. So I had a PTSD on consumer internet. So the opposite of consumer internet, is enterprise, where, Zenefits is the ultimate enterprise startup where, customers would call and yell, hey, fuckers, you screwed this up. I'm going to leave you guys. And they never do. They can't go anywhere. Zenefits was the only solution in the market that did what it did. And that's the sort of exact coin flip opposite of consumer internet, where people are like, hey, I love this site. This is so cool, so cool, so cool. And then, 3 months later, they're not showing up on your website anymore. And, they don't know why either, but they're not showing up, right? So, I like that, it was pretty fascinating for me to sort of live a different life, on the enterprise side of things. It was a fast growing company in the world at the time. They went from $0 to $50 million in ARR in 2 years. And, they sort of achieved a, $5 billion valuation in a couple of years, which is the fastest in history, even till date. So, it was interesting, there were a lot of common investors. Andreessen Horowitz was common. So I joined Zenefits as the director of engineering. That's where I worked with Parker closely and saw up close that he was able to make pretty contrarian bets that I saw in front of my eyes played out exactly as he predicted. He showed me 2 or 3 levels deep chess moves, which worked, which made a lot of sense and which worked in the markets. So I was fascinated by Parker. And, as soon as he got fired from Zenefits, I wrote him an email saying I wanted to work for him.
I'm sorry to interrupt you, but I'm curious, would you be able to give an example of a contrarian bet? That sounds really interesting.
Yeah, definitely. I sort of consider myself a business guy, right? I'm a founder. Many people at Zenefits are not founders. I can sort of marry engineering, technology, and business thinking, startups and distribution. That's what I thought of myself. And I would challenge Parker in late night sessions. I would find him in office and I would ask him, listen, I saw the data and Zenefits has a lot of untapped pricing power being an insurance broker. You guys are the only source of distribution for insurance brokerages in these sort of subsections in these counties. You guys are a monopoly. You can actually raise brokerage prices, and they can't do anything. They have to pay you the brokerage price. So there's a lot of untapped money here, and you can sort of increase your revenue by quite a bit by doing this. I sort of mined the data, and I knew what I was talking about, right? You can just increase your revenue out of thin air just by sort of saying, hey, the brokerage fee is not $500 anymore. From tomorrow, it's $1,000. And I thought I was a genius having figured that out. There are 300 people at Zenefits. No one, figured that out. I did. So I sort of confronted Parker late night and asked him, let's do this. Let's do this. We can easily pull this off. And Parker is like, no, that's a fucking dumb idea. And the reason for that is, okay, so let's say you're charging $1,000 and one carrier says I'm out and the other two says I'm in. Are you going to send all your clients to the two shitty carriers and not to the one best carrier? And if you do that, you become a broker and not a broker aggregator. And the bigger business is the broker aggregator business, where the customers trust you. The most amount of money you can make is from customer trust. And the longer game, it's sort of like Amazon letting the negative reviews, be on their site, even though, it actually hurts the sales, hurts the near-term revenues and sales. It's the sort of longer game that you want to win. And he convinced me to sort of see that. He sort of showed a path where the biggest revenue is not even from the brokerage business, which was 90% or 100% of their revenue at the time. The bigger revenue is in the sort of being a platform to buy any SaaS software. Like for a business to have a platform through which they buy all these different SaaS softwares, Gmail, Slack, GitHub, they're buying all of those things. The bigger vision is to make them buy all of those things through Zenefits, and how Zenefits can sort of make an insane amount of money, just like Microsoft was making, to be a middleman or to extract rent out of every single SaaS seat that gets sold, not the sort of tiny insurance business, although the insurance business was 100% of their revenue at the time, which is what we're doing at Rippling, and it's working fabulously well, right?
You mentioned Parker left. When you emailed him, you're like, hey,
he was
obviously you've worked together, you have right. He got fired. But you emailed him and you're like, I'm in on the next thing. And what happened after that?
I mean, he said, dude, there is no next thing. I'm chilling in Europe. Bye-bye. I'm not doing startups anymore. Fuck this. I'm too tired. And he went to Europe. I wrote back to him saying, you're absolutely going to do a startup and I want to join you. I wrote back the same thing. He didn't respond. He went for a month to Europe. He was chilling there. At the same time, there was all this negative press. Then CEO David Sachs was like bullshitting him on the press and, blaming him for everything that went wrong at Zenefits. And there was all this press that was happening. And then, after a month, he came back and he wrote me an email saying, I'm starting a company and I would love for you to join me.
You guys do Rippling, and Rippling's kind of like Zenefits Part 2, where Parker realized the full vision and not make some of the mistakes that you guys made scaling too quickly. When you decided to do YC again, what was YC like the second time? I remember we were in the same batch, and actually some of the experiences I have thinking back of you were at YC dinners where you'd be coding, be like the one guy like really seriously coding, and it was always like fun to watch because it was really clear how hard you guys were working and how much progress you made through the batch. So tell us a little bit about YC the second time around and what was working with Parker super closely like.
I mean, I think Parker is the real deal. I firmly believe, he's sort of like the Steve Jobs or Elon Musk of our generation. And, the thing with this is like, the biggest risk was always engineering, right? If you have a very sort of clear vision of what to accomplish, and if the vision is right, then the biggest risk is usually engineering. And, that is something that I can handle, right? That's something that's not risk for me. And Parker, had this like really ambitious vision where, it's sort of like building, not quite like building a Tesla car or sending a rocket to space, but it was still sort of like that. We had no revenues for 24 months. We burnt $10 million with a team of 20 engineers. No one other than, there was just 20 engineers and Parker. And 2 years in, we burnt $10 million. We don't have a single dollar of revenue from customers. So, it was a heavy upfront build on an ambitious vision.
Let's pause there for a minute. I know you guys built a ton of product. I think my company was one of the first early customers, like, right. You guys launched like YC companies first. So What was the strategy there to like have no revenue for 24 months? I know you guys wanted to build the payroll and the SaaS bit. I don't think you did the insurance bit for a while with Rippling. What gave you confidence you'd be able to monetize after 24 months? What was the strategy? And I also remember you guys had this mad billboard advertising blitz in the city at one point. So walk us through some of that. Curious to hear the behind the scenes on it.
The reason why we didn't have any revenue or we didn't charge startups like you guys any money was because you wouldn't pay us any money because you wouldn't use us if we asked for any money, right? I remember, YC first day of YC, there was Parker was his hidden co-founder. YC told us, Parker shouldn't let him not show up for the first few dinners or something because they don't want the news to get leaked in the press. So I was the only guy that showed up for the first few dinners. I remember sitting with you and other people trying to sell this product. I went around saying, I have this sort of payroll system, HR system. Do you guys want to sort of use it? And people were like, really interesting, but I'm going to go with Gusto, I think. So I couldn't convince anyone to use that. And then Parker joined the batch. And then, sooner or later, everyone was using it. Half the batch was using it. And it was a huge struggle, to get anyone to use it. Forget asking anyone for money. Even for free, they would rather pay Gusto the money and use it than, use us, right? So, in enterprise, there is a large uphill battle to get anyone to pay anything. You start with the lowermost tier, like, startups who are okay with you, screwing a few things up, and you slowly go up market, painfully, right? There is always that curve, but that curve was even steeper for Rippling because the competitors by that point had caught up. Gusto and ADP had understood from Zenefits that all-in-one was the way to go. Payroll and HR and health insurance needs to be together in a single system of record. Therefore, everyone had caught up. So we had to build at least that much before we could get any customers. The only guys who would use us without health insurance were the startups who actually had no health insurance anyways.
Yeah, that was us.
So we had to beg and plead to get the YC companies into it. So it was an uphill battle to close more and more companies. So there was a large build upfront, and we knew it going in. Like the biggest risk in my mind and Parker's mind when we founded the company was how big is the MVP? How big is the minimum viable product of this thing? Like we knew that like if you had all-in-one, that would be a much better world and people would use it. But does all-in-one include your own Gmail system, your own GitHub? Like where does it even stop, right? Like what are the sort of boundaries of that? We could sort of start without health insurance, and clearly the market said, no, not really. That doesn't work anymore. So we had to sort of build it later on. So the biggest risk always was, what is the MVP in this thing? When is it even going to...
With Rippling, there was the payroll piece, which was priced extremely low. There was health insurance, so there is now. There was like computers. I think you could lease the computer. And right. There was the SaaS piece where you could add seats, like, one click to sign people up to all of these different SaaS accounts, including some like single sign-on identity stuff. Yeah. So what's the revenue split today? Like, is it still insurance being the biggest, or is it the SaaS bit is the biggest?
The mind-blowing thing is it's actually so diverse that our investors have never seen a diverse revenue stream like this before. There does not exist companies that have a diverse revenue stream. Even the biggest companies like LinkedIn, there are a couple of revenue streams, but there aren't like 6 revenue streams, right? So for example, we're a reseller for Gmail. When you connect up your Gmail, we become the reseller on the Gmail. We can add seats, remove seats as your employees join and leave the site, right? And Gmail pays us like a tiny revenue on the annual SaaS billing. And that is like, I think 5% of our revenues right now. It is such a diverse split.
Did you have to negotiate these? No. It's all like based on existing rev share deals. Got it.
For the big ones, yes. For the players like 401k or whatever, the smaller startups, which didn't have any programs in place before this, we started with free and then finally negotiating.
Your pitch is, hey, free payroll software. And then, once you've got the system of record, you add in the healthcare and the SaaS seats. And it's all this part of this, like one click to add an employee and remove an employee. That's basically what it works. It continued to be the free payroll, and that sort of like as a loss leader for everything else in a sense.
That was the original strategy. Now it's not. Payroll is also paid and it works. Free sort of, we noticed that when we said free, the conversion rate fell down. It's actually, reduces in this space, not increases. The ideal conversion rate peak maxima is when you exactly price matched Gusto. At that point, that question doesn't exist anymore. That's one less thing a customer is thinking about when making a decision. And the thing about conversion rates is just like removing everything that they need to think about before they make a decision. If you say free, then they're still thinking about it, unfortunately.
So recently you stepped down from day-to-day responsibilities at Rippling. What led to that decision? I know you did like 4 or 5 years of working your tail off. And what have you been up to lately?
It became fairly successful in a fairly short period of time. And it's a life-changing experience for me. I'm kind of like done. And it was just mind-blowing how quickly it happened. Even I was surprised by, how much it took off. It's been only like 2 years or 3 years since we launched.
So it was 2 years of practically no revenue. In 2 years, it exploded to like tens of millions of revenue.
Right.
That's crazy. So it's almost like you guys knew when you had to turn on the switch and it just worked.
Yeah, it was more like the switch turned on, kind of, at some point people started buying.
Okay, so the switch was on and then at some point the product was ready. Like it just started getting really good and it started clicking.
Yeah, it was a health insurance that made it work.
Got it.
It was building that health insurance that really sort of made the...
And why did it take so long to add that in? Because you had to get licensed in a bunch of different states, or you?
Yeah, Parker had active cases on him from the Zenefits thing, and that's the only last thing we didn't want to sort of enter.
Yeah.
We really tried everything we could to make it work without it, and then instead, I had to get health insurance licensed. I had to become a licensed broker. And I had to create a separate company which sort of sold health insurance to make this whole thing.
Interesting. What's next? You said you're done, but you're not really, right? You're working on a bunch of stuff. I know you are. So how are you spending your free time? And so are you totally off of Rippling? Are you kind of still dabbling a little bit, or how are you approaching it?
Yeah, so I recently stepped down from my CTO role. I've been sort of passive for a little bit of time, ever since sort of the pandemic. Like we hired a new VP of engineering who runs the whole engineering team. There was a point, I think 4 years in or 5 years in, 4 years in almost, like I was thinking, I had these thoughts, hey, fuck, I'm fully vested. It's so much hard work. And when I wake up, my calendar is just, I had a team of like 100 people or something reporting to me, right? And the job at that point is just like meetings after meetings after meetings. My calendar from morning to night is just like full of meetings. And it's about like making sure these two guys are aligned. They know exactly, they're not pulling in different directions. And that was my job. And I wasn't feeling excited about a packed schedule, like waking up and doing that wasn't fun. I tried everything I could to sort of avoid these meetings. And, as a result, I was a very ineffective leader, right? If you don't do the job, like, the job is not getting done very well. So I was getting burnt out. I was doing it, even though I didn't like it. I was ineffective at it. And then, there was also sort of disagreements on how much chaos is okay. I'm kind of used to a lot of chaos with LikeALittle and, Rippling. And Parker is used to a lot of chaos as well at Zenefits, but not in a good way, right? Chaos killed Zenefits. So Parker is very, very conservative this time around. He wants to absolutely make sure that, it's a very well-oiled machine. It's a well-run company that's becoming a $100 billion company, because I think it's sort of for ours, it's ours to lose at this point. It's, Rippling has clearly won. And it's, if we don't do anything stupid, it's going to be a $100 billion company, in my opinion. So Parker is sort of pretty conservative about not fucking it up again this time. This is the third startup. And he really doesn't want to fuck it up. And that kind of, it makes a lot of sense. 100% of my net worth is also in this startup. So it makes a lot of sense for me to sort of, like hand over the reins to someone who's actually excited about the job at hand and execute on it. So that transition happened, and, pandemic hit. I actually, for the first time, had a bunch of free time to sort of sit and think and relax and like figure out what I want to do next. I played a lot of video games all day, all night, played with my son. There were periods that I didn't want to do anything. I mean, there was no point in waking up and like doing something, I'm just like doing well, right? What is the point? There was a lot of impactful projects that I could still start at Rippling, but I just, couldn't get myself to do it. And, that went on that lull went on for a while, where I was like, sort of burnt out, didn't find any meaning or purpose. More recently, the crypto bull market happened, and I was absolutely fascinated by the amount of core technological innovations that happened in the space. And I felt it's a little way larger than me. It was sort of like the Paul Graham thing that was happening, that was fundamentally going to shake up the world. And it did. Today, 10 years later, large part of my success is just being riding that bull run, right? 10 years later, it has completely shook up Valley, India, and startups all over the world, right? That's a huge movement. And it is very, very clear to me now that blockchain is such a movement. Everything is going to be rebuilt on top of it. And it is also clear to me that others don't get it. It's an important thing that's fundamentally going to transform the world. And people still don't understand. People are just like, when they hear blockchain, they're going and buying Bitcoin. I sold my last Bitcoin off last month. I think it's completely deprecated. ETH is the new Bitcoin. So anyway, there are fundamental technological changes that are happening here. The largest market caps in the world today are $1 trillion for Facebook, $1 trillion for Amazon, all these tech companies, right? In a post-blockchain world, they have no place in the world. These $1 trillion are absolutely going to obliterate to zero. They need to find their footing. They're sort of the Walmart of the internet era, pre-internet era. Walmart is being generous, right? Walmart at least played the game.
Let's unpack that. So what about blockchain do you think kills Facebook?
So blockchains are decentralized coordination mechanisms. In a simple way, blockchain is a database that everyone shares votes on the finals, on the state of the database at every point in time, right? Now, when internet was founded, there was no way to do that. There was no internet money or a native internet database where everyone agrees on the common state. And therefore, all these companies like Facebook or Uber or Airbnb, you needed centralized coordination actors like companies, like limited liability companies, which coordinated people in the marketplace. If it's Uber, they're coordinating between the riders and the drivers. And there is a 30% rent that they charged for this coordination. And coordination is actually not the only thing that they add, because, if that's the case, you could spin up a non-profit Uber and try to make it work. That actually does not work. They actually add a lot more value than the coordination. The value that they add is there is a VC business model, which is basically early on, subsidize, cut costs, run it at a loss for a long time, funded by VC dollars. And then, finally extract rent, a large amount of rent, become a monopoly, right? And in one way or the other, that's the Uber business model, that's the Facebook business model, or that's the sort of Airbnb business model in one way or the other. With blockchains, it not only solves the coordination problem that riders and drivers can just pay with each other, pay directly. It also solves the economics problem, like the bootstrapping problem, wherein speculators from all over the world create this currency. And you can actually pay riders, money to actually ride on your app. You can pay drivers money to drive, and you can completely make a loss. In fact, every crypto project that exists today, Uniswap or Compound, every one of them run on negative unit economics, right? Like negative unit economics. Think about, at Rippling, we're talking about what's a gross margin, 80% or 90%, right? And here, how negative is the gross margin is the question. They all run on negative unit economics. And they run on it because, what is negative unit economics? You actually provide more value out than the value that's coming in. In the crypto case, crypto has a few top banks, right? Compound is one big crypto bank. It's the biggest crypto bank. And if you borrow from it, they'll pay you money. If you lend to it, they'll pay you money. Regardless, they'll sort of, pay you some extra money, which is the money is in the form of the Compound shares itself.
So it's all subsidized by the appreciating value of the tokens, right?
Right. That's right. So essentially the idea is, hey, you're a user. Let's say all the users pool together and form a community, and they sort of divide all the shares of the company amongst themselves and create this network in which users can directly transact with each other.
Yeah, it's classic multi-level marketing, right? Where the users are your marketer and then they capture or share the value. So I think that's brilliant, right? So that makes crypto so disruptive. Also the next level of disintermediation. And I've also heard you talk about how it unifies markets in a sense, because now each currency is its own market, right? And with crypto, it's sort of one global market. So all of that makes sense. I think the interesting question is, how is it going to play out, right? What are the first few use cases? Replacing Facebook seems kind of hard because it's a free product and it's just so complex today. The marketplace one is interesting. So what do you see as the first set of use cases that start to go mainstream in a sense and start to tip sort of this movement towards something that starts to replace the legacy players?
So if you spend some time in crypto, that becomes the foundational question. Everyone understands and agrees. The crypto native folks, there is no debate on the if question. If a crypto social network is going to dwarf the others or not. If a crypto Uber is going to sort of completely upend an Uber or not. The answer is yes, of course, yes. Everyone knows that there isn't a lot of debate on that, right? The fundamental question is the when. So the when is the thing that needs to get answered. And if you want to answer when, you draw inspiration from the internet or like the past bubbles that have played out. And you ask the fundamental question, why did it take till 2008 for an Airbnb to form? Even though internet existed for a long time, why till 2008 for an Airbnb? In fact, there is a predecessor to Airbnb. I don't know if you guys, if you know about this, there is a thing called couch surfing where you can sort of stay on people's couches for free. So why did that work and Airbnb, for a while, and then why did Airbnb happen much later? So if you start asking these questions, my answer is, in 1998, yes, you could have technically built this Airbnb website. But if I have a home to list on Airbnb and only 0.1% of the potential renters are on this thing called the internet, why the fuck would I list this thing on the internet? And then by 2004, couchsurfing started to work. And the question then becomes, hey, if I have a home to list on the internet and only 0.1% of the people even have a credit card to pay, then how the fuck will an Airbnb work? So that's why couchsurfing is free. And it worked before Airbnb worked, right? There is this sort of, the timing question is around, you have to look at the Venn diagram of intersection between, the product that you're building, the potential target users and the users who are already on the internet, or in this case, or on crypto native. So you have to sort of intersect these two things. And whenever the intersection is high, that's when you have a killer app. And you can use this model to predict what, the past bubbles on crypto or the current bubbles on crypto pretty well. And, that sort of extends pretty well.
It reminds me of this model I heard Balaji talk about, which is basically if you have two axes, one is like the number of people in the world who own crypto and have a crypto wallet, and the other axis is like the amount of transactions they do. You kind of need the number of people to grow to a certain point before the transactions can grow, which is, I think, kind of what you're saying too. The thing I get stuck on is which market is likely to tip first. Do you think it's going to be the US? Or do you think it's going to be like one of the emerging markets that are going through like currency destabilizations? How do you think about that? And I think this gets into like, you're thinking about moving, right? So I'd love to get into some of that too.
Yeah, I think for the longest time, that was the most interesting question I was thinking about. I bought my first Bitcoin in like 2010 or 2009, during the LikeALittle days, just after LikeALittle, maybe 2012, 2013, those days when I was doing LikeALittle, I put a $5,000 into it. That was the question I was thinking about. I had a lot of models of like, hey, countries are going to adopt it, Bitcoin is going to tip. I remained a Bitcoin maximalist up until 2017. And now that's not the most interesting question for me anymore. That's completely irrelevant for me. I don't play that game. I think that game is still interesting, but there are much smarter minds playing that game. And I sort of prefer the contrarian niches. I stick to them. That's the game that Morgan Stanley is playing, or Goldman Sachs is playing, or the large macro traders are playing, which country is going to adopt and stuff like that. I've sold my last Bitcoin a few months ago. I've turned into an ETH maximalist. So what I have an edge on is predicting the evolution of this technology and how it's going to get deployed versus predicting the currency aspects. And I also think this is actually more important than the currency aspects, because the currency is going to get redundant. It is going to get completely deprecated. So for example, Ethereum does everything that Bitcoin does, but better, right? It's faster than Bitcoin. It's more programmable than Bitcoin. You can have a lot of dApps on Bitcoin. And for the user of Ethereum, most of my friends who are smart money, Ethereum is their US dollars. Why do you have US dollars? Because it gives you optionality. You don't know whether you need to pay rent tomorrow, or you need to go to the hospital tomorrow, or you need to pay your taxes tomorrow. The US dollar pays for all of that. In the crypto world, Ethereum pays for all of that. You don't know which shitcoin you're going to buy tomorrow. You don't know what crypto activity that you're going to do tomorrow, but Ethereum is your gateway into that.
Incredibly flexible currency in a sense, right? You can use it as like currency, but also as like shares and tokens and like so many.
With Ethereum, you can actually buy these other tokens. Right. You can buy crypto art with it. You can buy other tokens with it. If you want to do any crypto native activity, which is you can either borrow or lend, or buy some tokens, or there are a few crypto native activities that exist today. And Ethereum is your gateway to all of those crypto native activities, right? Bitcoin is not. And this, for the smart people in this ecosystem, there is a $6-9 million Beeple sale that happened. It sort of raised eyebrows and headlines. That guy has been a friend of, Metagon has been a friend of mine for 10 plus years now. And it was paid for in Ethereum. It was not paid for in Bitcoin. That's the currency of choice for the crypto natives today. And when you have that kind of optionality, Bitcoin just gets completely deprecated. Like, why would anyone go to Bitcoin anymore? So I think that has already happened. And that's why, I sort of think the foundational question for like which countries are going to trip what is going to break is completely irrelevant, because they're going to tip and then they need to make a move from Bitcoin to Ethereum or maybe, So I would rather just like go directly into Ethereum and then directly deeper into that rabbit hole than get stuck on the macro.
Yeah. So I think the what's going to tip question assumes like crypto is going to replace some existing world use cases. And I think part of your underlying thesis is that's not where the disruption is going to start. It's going to start with crypto native use cases and like totally new things that were not possible before. So we'd love to hear your mental model on how you think about crypto native and then sort of like the replacing existing use cases. Because I know you've written about this.
If you look at the internet adoption, you can sort of learn that it sort of grew in concentric circles, right? In the beginning, it was just a university that had it, and then it opened up to a wider audience, and then only a few random people had it. They were just sort of artists or creators. They used it the first big killer app on the internet was AOL. And I think, it was just like random people showing up and they're talking with each other, right? That was the first big killer app on the internet in 1998. And that grew the internet audience. Once you had AOL, there was like at least one nice reason to get on the internet. So that grew the internet audience. And then AOL had insane amount of market power at that point in time. I don't know if you remember I was too young to live through the .com, but I learned recently that the world used to be like, you raised $20 million from VCs, go and make a deal with AOL and give them $10 million and give them 20% of your company so that AOL features you for a day on their chat messenger, right? So it was the homepage of the internet, and AOL had insane market power at its peak. It was the most valuable company during the .com era. So that grew the internet audience by a little bit by servicing the existing internet native audience, which were just random people all over the world who came online to talk to each other, talk to strangers, right? We are sort of living in a similar time in crypto right now, sort of 98, 99, pre-explosion. The big crash is sort of ahead of us. And there's a huge crash coming, right? There's a huge speculation and crash coming. It's unclear whether we're already there or not. So then you had Yahoo, which was the next homepage of the internet, which is like, okay, the internet was complex. AOL was just featuring one startup per day, which is clearly not enough. Now there are enough different startups that there was a directory of like what are the top pages that you visit on the internet. So suddenly your mom could get online. She can just go to yahoo.com and click on the categories that she wants, and she can discover these websites, right? Because otherwise they were just disorganized websites that AOL gets to feature once in a while. So you had Yahoo, which was a new homepage for the internet, which is again democratizing access to that AOL homepage in some sense, right? So people sort of cut out the middleman, which was AOL, and went straight to Yahoo. And that's the new middleman. And then in 2004 or so, then there was Google, which was like the number of websites on the internet kept growing. It became more and more unmanageable to have a link tree. You just like open up your box and search for it, right? Now that made it even more accessible. Like, even your grandmom could now sort of come online and search for something. She doesn't need to know yahoo.com and navigate a complex link tree. So it simplifies it even more. It is still meant to simplify the life of the existing internet audience. It's not like hoping that grandmom comes online. It's still sort of a killer app for the existing internet audience, but that enables that audience to expand by another 10x.
And I think part of it is the amount of content on the internet was also exploding, right? During AOL, there wasn't as much content. Yahoo, there was like tens of thousands of sites, and then Google came along, was like, bajillion sites.
So, in a similar analogy, you can sort of think of crypto as like, at first we had Bitcoin, and we had all these separate chains, which are just claiming we are a better Bitcoin. Monero is a better Bitcoin because it was private. Or, there was this thing called Litecoin, which is a better Bitcoin because they just changed the variables so that it produces blocks faster. There are all kinds of like separate coins, which were claiming to be better Bitcoins. And they all sort of died or like washed out in this bull run. With Ethereum, we said, we're actually a better Bitcoin because you can actually do more. You can do everything that Bitcoin does, but you can do more, right? It's faster, cheaper, and then it's more extensible. You can sort of, it's a more general purpose DB versus Bitcoin is like single ledger. So Ethereum sort of came in and it sort of took over from there. It has only started working recently, right? So post the 2018 crash, Ethereum ecosystem has completely exploded. There are multiple like really large, again, now once Ethereum users got very rich, the crypto native audience now is on top of Ethereum. They hold a lot of Ethereum. They don't have a lot of real world assets. They may or may not have done any KYC with any exchange. And they certainly don't want to sort of alert their governments and stuff about their wealth. So all this wealth is sort of locked into these coins. And, it needs to find a way. What does it do? Well, it buys art. So, you have this NFT craze. What does the wealth do? Well, it doesn't want to trade in exchanges, but it still wants to participate. So, you have DeFi, decentralized exchanges. These are risk takers, right? Some people want to lever up, some people want to lever down. So you had these banks, which are lending markets. And, all these activity became within Ethereum. So that's the crypto native audience today. And now the most exciting thing that's happening in crypto, which is foundational, is actually the bridges are going live. So what is happening now is Ethereum is the world computer. It's a single computer. It's fairly slow. It's expensive to run instructions on top of it because every instruction gets validated by a million other computers. So the obvious next computational breakthrough is how do I create faster Ethereum, which you have a series of companies like Solana or Polkadot or Cosmos create near creating faster Ethereum. They're creating other cities. Think of Ethereum as the New York of the world today, and these guys are creating some other cities like Thailand or whatever. And they created it. The activity is not going to those cities because Ethereum is king. All the money is here. Nobody's going to go to your new city. People are not going to settle there. So their only way out is to build high-speed bridges between these two cities. And so far, the only bridges between these chains have been exchanges where you need to go on KYC. Today, there has been a fundamental technological breakthrough where there are these decentralized bridges that have already gone live in the last 3 months, actually. Near has a bridge, Cosmos has a bridge right now. So with these bridges, without going through any exchanges, you can, one chain, which is a database, can make an API call to another database, and they can actually talk to each other. Right? For the first time, it's still clumsy. It takes a few minutes for the calls to succeed, but it works.
What's an example of a use case? Let's say I'm sitting on a bunch of Ethereum and I want to use Near, one of these new blockchains. What am I doing to get my ETH over?
So you can think of, so your ETH is in this database called Ethereum. There is another database called Near. And you can think of it as a trustless API call where these two databases can actually interact with each other. So Near provides a way for you to take your Ethereum from the Ethereum network to the Near network, right? There is something called a bridge, which is a UI by which you can sort of port over your Ethereum from here to there without going through any central party. It's programmatically guaranteed that this Ethereum balance will get locked here and it'll get minted here, right? So it's a programmatical way to do it. Once you get your Ethereum to Near, now Near is insanely cheap. Ethereum, if you want to do any transaction, it costs $50 per transaction. So only if it's high value, you're able to do anything, right? But once you come into the Near land, then it costs less than a cent for a transaction. You can play games on chain. You can do whatever the hell you want. You can buy, low value tokens. You can do high frequency trading. Imagine reducing the price per action from $50 to a cent. So you can do a lot of things on these sort of high throughput chains. And that's the fundamental breakthrough that has just happened. So suddenly, on-chain activities has gotten insanely cheap, and you can build, imagination is the limit, right? You can actually build social apps on top of it. If it costs less than a cent to like a post, is it that bad? Can you actually build a place where people can like posts? There is a game called Axie Infinity that's taking off, which is a game on top of these chains. I'm not sort of aware which chain it's running on and stuff like that, but we are certainly entering a multi-chain world connected with bridges, with Ethereum as the center of this whole ecosystem.
So you plan to move to Singapore. Would love to hear a little bit about that. And then I want to ask you about your angel investing. And I think it's always interesting to hear about where you're spending your time and then also where you're parking your money.
Yeah, so I've been very fascinated by the US, mostly because, it aligns the best with my values. And I wanted to live the American dream, right? To go from absolutely nothing to something within a short period of time and to sort of make a fortune. I think US is the best place in the world to make it. And it has always been. There is one new United States which is competing now with that. It is actually even more US than US itself. It's called crypto. It's the blockchain. It's not a country. It's a movement. It's an online movement. And, larger fortunes can be created in shorter periods of time. It's even more meritocratic, and it's actually even less rent seeking. US is sort of turning more and more rent seeking, and US has to turn into more and more rent seeking. There is a huge populist backlash against this tech wave, which has created insane income inequality, right? And US is sort of definitely trending in the direction where there is a backlash. And this backlash is similar to what happened after the 1920 crash. And, we live in an age of insane leverage. Like, I come from nowhere, right? And, within a decade, I'm able to generate like $500 million to $1 billion in wealth. And that's just insane. The only other time in history where something like this was actually happening and was possible was the early 1900s. In the 1910, 1920s, the world completely changed. That was the peak of capitalism. We found the aeroplanes, we found the steam engine, we found electricity, we found cars. Everything was happening in such a short period of time, and people are projecting that to infinity. And you got the 1920 sort of bubble and bust, right? That was the time when steam engines were invented, and it flattened the world, right? So the lowest cost producer in Chicago was now competing with the lowest cost producer of coal in Minnesota. And for the first time, you could actually transport that coal. So, so it sort of what that creates is like, high cost producers go out of business, and there's a large aggregation of wealth. And the guy who created the steam engine makes a lot of money. The guy who founded the wheel for the steam engine makes a lot of money. And, you had this era where Tesla could just go in a room for like a year. And that's exactly what he did. And he came out with a brilliant idea, and people like that became the richest people in the world at that time, right? So it was that huge era that happened. And then we had a crash. Post the crash, of course, the Federal Reserve started printing money and all that, but you also had a similar populist backlash from the haves and have-nots. The income inequality was the widest, and people voted populist policies in. The tax rate went from less than 10% to, for the next 50 years, it kept increasing. At the peak, it was like 70, 80%. And, we're seeing something similar to that happening right now. And I think it'll happen in the US. And I just don't want to get caught in that backlash. Now, the entrepreneurs and the creators, all through history, people have always taken money away from the entrepreneurs and the creators and given it to the masses, right? And this has happened all through history. Like, if you look at the GDP per capita growth of the world over thousands of years, the world was not growing much at all. It was like less than 0.5% per year, till about 1800 when the United States was founded, and then it took off like this. And the key change, in my opinion, for why that happened was, right to property. Before the US, a successful baker, after founding the third bakery, didn't found the fourth or the fifth, because the army would just come and take it. Instead, what he did was he hid the gold between his bread so as to preserve his wealth, right? And, the United States happened, and then they said, you can actually create as many bakeries as you want, and we'll protect you. And then, you had the entrepreneurs from which people are not taking money away from. And then you had this insane sort of explosion called the United States. And I think, and then even there, there is yin and yang, and populists always come back and they sort of take the money back, and they sort of raise the tax rates to 80%, and these things happen, right? But now we creators actually have a real opportunity called crypto. And it is not clear that the governments can actually take that money away at all. The famous story is the most famous Russian social network is called vKontakte. It was the Facebook of Russia. And the guys who built it created this app called Telegram. And when they launched the app, people were discussing like anti-Russian messages, and the government didn't like it and threatened to throw them in jail. They even sort of took away vKontakte out of the founders and sort of squeezed them out. And the founders, sold their vKontakte stakes just one day and put all their money in Bitcoin. They bought a Neville passport or something, took the next flight to Dubai, and they started Telegram, right? So it's kind of really unclear now if there is an effective way to confiscate wealth at all, if it's just a private key. Like, how does governments even interact with that? How does declaration even work? So, it's a very fascinating world where actually creators can, keep their wealth. And we're going to look back at this era of progressive taxation. The progressive taxation is more like, hey, if you make more money, pay more percentage of your wealth as taxes. We're going to look back at like, that was kind of a little crazy. There are sort of levels of doing it, right? At the most basic level, there is sales tax, like whatever you consume, pay a tax on it. At this slightly higher level, there's a percentage-based taxation. Whatever you make, pay a percentage of it. The most extreme level is if you make more, pay even a larger percentage of it. So crypto, it's sort of more around the sales tax-ish regime.
So, crypto kind of replaces the progressive tax with the consumption tax, right? Because you can pay tax as you pull things out through an exchange instead of. Got it. How does that lead to you going to Singapore? Does Singapore have a really friendly?
Singapore is extremely crypto friendly, and that's where crypto progressives are moving. Like Balaji is there, Metacoin is there, the Binance CEO is there. That's turning out to be a crypto capital. of the world now for the guys who sort of are exiles. It has absolute privacy. You don't need to declare your wealth. Your wealth is your concern. They only care about the business that you do inside of Singapore. So, it's a really sort of progressive, crypto-friendly country.
So what are you investing in these days? I know you do some angel investing. You have a syndicate AngelList, and I'm sure you invest outside that too. So what are some spaces you're following or making investments in?
Yeah, so I do have a rolling fund in AngelList. I used to do a lot of SaaS and stuff that sort of related to rippling on the periphery. I still do that, in exceptional situations. I certainly back, founders that I know and I've known for a while. And when they're doing something interesting, I certainly back it. But mostly I try to spend my time on crypto. So I mostly back crypto projects these days.
Okay, so the last question I have is, what are you reading these days? Any top of mind book recommendations? Could be fiction, nonfiction, whatever. It'd be great to get like one or two books you'd recommend to anyone in the audience.
The most interesting thing that I actually spent a lot of time on is the Tendermint white paper, which is a way to get proof of stake to work, which actually proves that it actually works. And this is actually very foundational for me because that's what converted me from a Bitcoin maximalist to an Ethereum maximalist. I thought it was all Bitcoin in the 2018 bull run. I thought proof of stake was actually not going to work because, zoom out, the Byzantine general problem is a 50-year unsolved problem. And there is this mysterious guy called Satoshi Nakamoto who came out and solved it. And he founded Bitcoin. It's just like a double whammy rare event. It just never occurs. And on top of it, he's anonymous. Nobody knows who he is. So he didn't do it for the credits. He didn't do it for the money because none of the money he spent it. So what the fuck did he do it for? And he just created two major inventions in the history of the world and nobody knows him. So that's a huge sort of outlier event in the history of the world. It's almost like you kind of question everything at this point, right? It has never happened and, it'll probably never happen again. So given that sort of founding myth, with that, a 50-year unsolved problem gets cracked. What are the odds that within 3 years of that, there is some, 19-year-old dude called Vitalik Buterin sitting in Waterloo who finds a faster, better solution to the same problem? I thought the odds were none. Vitalik Buterin had a blog post about proof of stake. I thought it wasn't going to work. There were lots of loopholes in it. And in the 2018 bull run, there were a lot of proof of stake coins which got launched. Every one of them got hacked for one reason or the other. So I thought it just was not going to work. There is no second solution other than the Nakamoto consensus to this database consensus problem. And then now it's working. When I came back to this bull market, it's actually working. I mean, if you can break the proof of stake consensus algorithm, you stand to make hundreds of billions at this point, right? So the stakes are large enough that people have tried and, it has stood that test of adversarial networks. So I think it's a very important thing to learn and understand. And I certainly spent like a week going deep into it.
Awesome. That's a great one. I look forward to checking it out. Well, thank you so much for your time, Prasanna. I know we've run over. This has been a really, really fascinating and interesting conversation. Thanks very much. Great to chat and hear your thoughts on so many different topics.
Thank you, man. Great chatting.